Good afternoon, everybody. Mona Zoet again. We are now going to the next panel, which is wealth management. And I'm super excited to listen to this panel because we have fantastic people speaking. But I won't, say too much because I will leave it over to our dear friend Koen, who's going to moderate. No, sorry, Maxim, who's going to moderate this panel. And have fun, guys.
Thank you very much, Mona. So before we jump into the panel discussion, I would love to give you a small crash course on AI machine learning, as that's the main topic of this summit. So quick introduction about myself. I'm the lead AI and data at IntellectEU, a company focused on digital finance and emerging technologies. And I'm also heading the product development of VELMA, our product for the wealth management space to enable hyper-personalization, and also sometimes teach machine learning courses. Let me quickly share my screen because I've prepared 2 slides or 3 slides to make you experts in AI. You can see my screen, right? Probably the other speakers can comment.
Yes.
Okay, yep. Great. So this crash course, we hear a lot about artificial intelligence and about machine learning, AI and ML in short. And they're used interchangeably. I'm also guilty of that. But basically, machine learning is a subset of artificial intelligence. So if you look at AI, I really love this definition. Not just going to read it, but what it basically says is that AI are all the things that computers can now do that we actually thought were only possible by people to this point. The machine learning is a subset of that, in which you're going to use data to actually make your program smart. So to put in an example, you can solve different problems in different ways. So if we look at, for example, the play of chess, it can be solved using AI in general without using data by just mapping all your moves and your opponent's moves, and then use some clever path finding methods that are defined in mathematics to find the optimal path and to find the optimal next move. That's AI without actually making use of data, right? Because you just map out all the possibilities. Then if you look, for example, at our friends of Google, how they solve the problem is that they have 2 machine learning models. Actually, it's 1, but let's say it's 2 now, that play each other. And at the start, they're very, very bad. But then they learn how to play. They learn actually what moves are better than others. And they become better and better over time by actually playing. So that's actually making use of data to make a program better. If we then look at it more high level again, so machine learning, and that's, I think, what's used most often, this subset of AI in the whole space. So if you compare it to general programming, what do you do there? And I think every one of you knows a bit how to program, even if you have never programmed, but you've all followed classes of mathematics in high school or university. What you do there is that you define a program yourself. So you write some rules, then you have an input, you give this input to the program, and it gives you an output. Of course, it's very difficult for very complex problems to find those programs. So that's where machine learning comes in which you're actually going to say, okay, I'm going to choose an architecture or a machine learning model, and then I'm going to train it on data. So there I have my input and my desired output that I want. And your machine learning model magically is going to learn how to adjust itself to have this output as close as possible to the real output that you wish. So to put that in a small example, if we look at the problem of multiplying a number by 2, we can solve it in a general programming way by just defining the function input at the function of x equals 2 times the input. Then if you give the number 4 to this program, it will output the number 8. If you look at a machine learning way of solving this, there you actually choose a machine learning model, and you have a lot of different models, and you have neural networks, you have support vector machines, decision trees. Like you have a lot of models. Let's take the most simple model that you all know, which is a linear model. There you have that your output equals some kind of model parameter, and we see here that it actually should be 2, but the machine learning model doesn't know that yet. So you have a model parameter times the input. Then you give a lot of input and output data points that you actually know, and then the machine learning model is going to learn. So at the start, this model parameter is initialized randomly. So let's say it's 5 at the start. You give the number 1, then it will output 5 times 1 equals 5. But you know that the true label should actually be 2. So you're going to say, look, machine learning model, you're very, very stupid. That's completely the wrong output. Please adjust yourself. And then there's some very complex mathematics that is going to tweak this model parameter to actually give a better guess at the next point. So then you're going to give 2. Maybe the model parameter is now 3. So then 2 times 3 is 6. Still wrong. Then it's going to adjust itself again until it actually converges to an optimal accuracy or performance that you want. And then you have a learned model. And you can start using that model actually for new observations. So if you now have the number 4, which it didn't see in training, it will actually output 8. So that's really the essence, everything you have to know about machine learning. I will send you the certifications after this panel. But basically, it's always you choose a model has model parameters, and you feed it data with inputs and outputs to actually let it learn those model parameters. Might still seem a bit vague in the context of this call, so I'm going to give you a very small example about how we use machine learning in our product to enable this personalization in wealth management, and then we're going to jump into the panel discussion. So if you look at VELMA, as I said, it can do a lot of things, but I'm just going to give the example of recommendations, asset recommendations for investors. So we have a lot of data. As I said, it all starts with data on clients. So here we have Robert, we have its portfolio with a lot of different stocks. And then we have some attributes about Robert, and we have the same for every asset in his or her portfolio about all the clients, and then we have some attributes on those assets. Then we have a crazy machine learning step in which we're going to learn profiles for every person and for every asset. So that's basically, we have all this information that I can tell to you, but a computer can't work with that. So what we do is actually we create those mathematical profiles, and then you can plot them in this profile space. So what you just have to remember is if 2 points lie closely together, like those 2 people, they're probably similar based on everything we know. And then we're going to use those profiles. So we're going to use this outcome of the machine learning step to actually provide recommendations for example, a specific person. So that's how we use machine learning. Let's say for Robert, we want to have some recommendations. We get Google, Microsoft, and Facebook. So those are the assets who suit Robert best based on the machine learning output. And they also come with explanations out of the box, which is pretty important for regulation. And I think that's also a topic that we will touch upon later. There's way more we can do here. I'm not trying to sell this here in the talk, but it's just an example of how AI and machine learning can be used in wealth management. So that's in a very, very small nutshell what I want to say. So now you have some basics and basic understandings about machine learning and its use in wealth management. And then I think it's time to introduce the speakers because we only have 30 minutes left. I'm very, very happy to actually have 3 speakers with a completely different background. So on one hand, we have Koen Vanderhoydonk, who is the CEO of Belgium, Luxembourg, and Germany of Blanco Services. So Koen is really on the product side, on the solution side, offering this to wealth management companies. So very interesting insights from him that we'll get. Then we have Jeannette Chan, who is a private wealth advisor at St. James's Place Wealth Management in Asia. So she's really in the field. She's talking to clients day to day. So it's going to be interesting to learn from her how it will actually impact her job in the future. And then we have Evelyn Koh, who is head of network compliance at Standard Chartered Bank. So she will shed some light on all the considerations when you want to use AI or data and what you have to look out for. So that's basically the short introduction. So I think it's not really a panel discussion as you will be used to. So we're not going to just argue with each other. Really, we want to have the most insights from those people's expertise. So I have 3 questions listed up in which every one of them will actually answer. And then we will have some room, of course, for Q&A. So Koen, also after this first question, please feel free to give a short introduction about yourself as well. But I think the first question is for you, Koen, like how do you work with the industry to increase the adoption of technology, the use of data and of AI maybe, and what are the main considerations or hurdles and breakthroughs you've encountered so far?
Well, thank you very much, Maxim. Yeah, I'll love to give you some of my insights, and rather than introducing myself, because therefore we got an internet, so you just Google my name and you'll find out who I am. So I rather spend my time that I've got in this conversation to talk a little bit about what are my views on on how in the wealth tech industry specifically, because that's the panel discussion we have, how the topics such as data and AI are playing an important role. And I thought about it before, obviously, as what would be my my runway during my short keynote or short discussion, whatever you call it. And then I thought, yeah, there's nothing better to start with than starting with a user experience. Because at the end of the day, it's all about the client. It's all about doing good for our customers and making sure that at the end of the day, they can make an investment into a financial product and therefore have a better life in a general term. And I'll come back to that at the very end as being referring to financial inclusion. But I thought about, yeah, AI is all over the place, but a lot of us, we don't really realize it. I'm glad that you just outlined a little bit, Maxime, about what it really is, but in real life, it's all over the place. And if you think about the user journey, it all starts with an onboarding. And when onboarding starts, that's where we nowadays, with latest regulations, are allowed to identify a person from a distance. Hooray, hooray, because this was really good because of Corona came and we could not see people in real life. So thank God we had a solution that we could do remote identification. And if you look at solutions that are used for remote identification, yeah, that's where we got AI, because we got a certain level of machine learning, probably even better, where algorithms will make a matching of your face. So they make an interpretation of a picture and they match that with a face. So that's the first one we see it. Then if we continue, we basically also make a risk assessment. At least that's what we're doing in Europe, and you see high adaptation also in the rest of the world. We call that MiFID in Europe. And what we do is we run a suitability test. So you want to see whether a person is suitable to make a certain investment, so that you as a person making an investment opportunity, or you will make a suggestion, that you don't make the wrong suggestion. You protect the end investor. And one of the things that you see here is that a lot in the market, traditionally, just questionnaires were used, and they were often filled in with leading questions. So meaning that if you don't sleep very well tonight, yes, I don't sleep very well when the markets go down, then you are not allowed to, then you cannot bear any risk. But actually, it's sometimes these questions were leading to product solutions rather than really being insights or giving insights about the person. So there's a whole stream about behavioral science that comes in, and that's why risk analysis or risk tolerances are now being measured in completely different ways, and they're not taking into account very subjective things, but they actually start with real situations of the client and real situations to their story. There's also something that we do within Blanco. We started doing that 5 years ago, and there was some resistance in the market because it was completely new, and suddenly they were somehow losing the effect or the power to lead the client into a product. But if you think about it from a logical point of view, it should be the other way around. So I'm very happy that this is changing. Then a client comes on board, you know what the risk they want to take, and that's where portfolio building will come. And there also a lot of potentially AI comes in. There's robo-advisory that came across, let's say 7 years ago. In my opinion, it's a little bit over the hype cycle, but the fact that robo-advisory was about to overtake the whole industry, I think that discussion has really changed, and the discussion has changed into a hybrid model where algorithms or robotic ways of dealing with portfolios, sometimes just taking emotions out of investments, sounds strange, but it's sometimes good because it's the behavioral gap that you just try to bypass. But that's nowadays something that you see as well, which you are very much supported with portfolio management systems that have usually or often built in algorithms that support portfolios. And then there's a couple of places as well which you don't think about. There is all the wealth managers around the globe, they have a CRM system. They have a system in where they keep track of their clients. And if you use Excel, the Microsoft stack, yeah, then there's less integration in terms of smartness. But if you use more modern CRM systems, they also help you to identify the next step. And that next step, that's completely AI based, because that's actually looking into the system and it's trying to predict what is the next step for your customer. So there again, AI isn't there. If you have, if you do online onboarding with your clients, which you see more and more, because the older generation, the money of the older generation is shifting to the younger generation. While you do that online, yeah, you use chatbots. Chatbots use machine learning because they do natural language processing and they will reply. So I have not actually expressed so far something really strange, because this is the usual wealth manager that I'm explaining. But if I would ask any of them to say, are you using AI? They would all say to me, no, I don't use that. I'm not so technical savvy. But actually they all do. And then that's AI. And then I think about data. There's also importance about data. Because yeah, data is crucial for investments, because you want to give insights in the end customer on what they are investing in and what does it bring to them. You wanna give them insight on the compound interest effect going forward. You want to show them in which they are investing and if they're making the right decisions. So that's big data, guys. This is where data is crunched, and that's where data comes out, and that's what you were explaining as well. That's where you have data points and you do something with that. But actually, there is a common given thing, which, for my opinion, is rubbish in, rubbish out. And that's somehow the challenge in the market, because within the wealth management space, in Europe, we got a law called PSD2, which is 100% applicable for cash, which means that it's open banking, it's already available in the States, so you kind of share your positions amongst each other if you have certain regulatory conditions, obviously, but this does not exist for investments. So it's a trouble, because you're unable to get a view across banks, which is nice for the bank because it keeps the relationship of the client stronger. But I think there is a need and there is an opportunity for the market to do that. So if I look what we do at Blanco, we currently already hook up with 50 different banks, and we automate that data stream, which gives at the end of the day an extremely valuable proposition, because you can start comparing different private banks with each other, different asset managers with each other. So for the end client, this is obviously bringing a lot of transparency. So to close my quick speech, I thought about 4 things, and it's what I started with. I think user experience is going to be key going forward. So you see that the expectation is changing because the wealth is changing as well. So it's almost a given. It's a hygiene factor that as a wealth manager, as a respected wealth manager, you also serve for the mass affluent, and you also make sure that somehow the newer generation is taken up. I think. Secondly, we have a large obligation in terms of ESG, sustainability. It's a hot topic within the wealth management industry, but if you take that into a data level, I think we got a marvelous opportunity. If I can dream just for 2 seconds, I would love the regulator to come out with a data platform that makes a very neutral kind of, how to say, a neutral it's when you classify some of the investments. Today, it seems that we're heading towards a kind of a challenging environment where there are many players in the market that make statements that say this one is green, this one is not. It should be somehow neutralized, and I think that's where an opportunity is for the supervisor. If they could take this, use technology, yeah, then suddenly you have a binary system that makes decisions, and you'll have a one fits for all. And I think that would be good for the ESG thing, because I feel that it's sometimes used and abused. So that would be something. And then last but not least, and then I'm done, it is about also what I said in the beginning. It's also about us as a wealth industry or an asset management industry. We should have all one common objective. And that's something that I heard already saying several times in these conversations today in the conference. We have an obligation for financial inclusion. And there are so many people around the globe that are still unbanked, that don't have a saving for their pension. And it's us as wealth tech that can bring technology to help them to make the step to start investing. And on that bombshell, I give the word back to you, Maxim.
Thank you very much, Koen. I think that's some very valuable insights. What I remember is that Yeah, AI is everywhere, even in the wealth management space, but probably we don't even notice it. So I think that bridges perfectly us to the next speaker here, Jeannette, who is actually a private wealth manager. So I really want to hear from her, like, how do you work with your clients today? I think that's the main starting point. And how is AI or the use of data or technology in general already helping you in that? And then if you look into the future, how do you think that it will even help you more or impact your day to day?
Yeah, thanks. Thank you, Maxime, and thank you for having me on your panel today. In fact, a lot of what Koen said resonated with me, so I have a few things to add to that as well. But first of all, just a brief introduction. I'm Jeannette. I'm an associate partner with St. James's Place Wealth Management. We're actually the UK's largest private wealth management company and on the FTSE 100. And we currently manage over 190 billion US dollars on behalf of over 800,000 clients. And we have a 96% retention rate. And why do I say this, and how does that relate to what I'm going to say next? I mean, it is an amazing feat to achieve that within less than 30 years, and a big part of that is actually the face-to-face financial advice that we give, that we strongly believe in. And we focus on building long-lasting relationship with our clients. We provide a range of wealth management solutions, from investments to insurance to pensions. So we really do the wealth management bit of this, and not the banking side of the transaction banking side. You're okay? You're okay hearing me, right, Maxime?
Loud and clear.
Okay, good. Yeah, I heard something. So and why I mentioned that is it's interesting to see how scientific wealth tech is. What you shared, Maxime, with all that very very interesting 3D portfolio. And I would say that yes, it is indeed a science, but it's also very much an art. I found that before this, I was in investment banking for 20 over years. I was in the dealing room, dealing more in financial derivatives with institutional with companies. But now that I'm dealing more with on a personal level and more on a retail level, it's very much a science, very much an art. Sorry, because I still think that sometimes people just like to have money conversations. I mean, yes, indeed, customers have access to a lot more information and products these days, so they're more savvy in terms of the hard data. But more information does not necessarily mean that one makes better decisions. In fact, it could make decision making more difficult. So very often we have money conversations with clients, and it's a journey together. We talk about needs, wants, hopes and dreams. And very often you meet, and when I start talking about this, and I say, where do you see yourself in 5 years' time, 10 years' time, even 20 years' time? It is something that people have not really thought about. So that kind of conversation, I feel, may take a while for the robo advisor to do. And I think it's getting to know the individual, because there's so many aspects and so many perspectives, and so many things can change as well. Life events, things like COVID can change everything. So it's very much a journey. It's very much almost like a coach, a financial coach in the wealth management journey. So in that aspect, I still feel that face-to-face advisory is quite key in terms of wealth management. Yeah. So coming back to, sorry.
Maybe if I can quickly pick in, how do you see, because fully agree that the advisor is still key in this whole equation, but do you see AI actually helping that? I don't think it will ever replace the advisor, but how do you see that it can maybe assist you in that journey?
Yeah, I was just going to say, actually, so we embrace AI, or we embrace technology very much, right, to enhance what we do. And I think on a very basic level is really we rely on technology a lot to keep me efficient and productive. First of all, managing my calendar, having different devices, and syncing the information sounds really basic, but it makes a big difference. And the client relationship management system, the CRM system that Koen mentioned as well, is a big part of it, because we meet so many people all the time, so many events. And, just a simple app that I have that I can even just scan a business card, which is amazing. I mean, I use my mobile phone camera to just scan the card, and it, records the information that I can then download to my Excel and database. And that itself, where I can put little notes on a particular person, what their likes, dislikes, whether they like golf or certain things, even about their risk profile. And it becomes very easy to monitor and to track. And if I have certain events, for example, I know would interest certain people, I can search it up really quickly. So that's one part of the technology. In terms of paperwork as well, it's helped a lot over the past year, because we've just been working from home and just doing so much online webinars, as well as online meetings. And a big part of it is DocuSign, for example, where we're able to then just get a lot done without meeting people, and that really has improved the efficiency. Yeah.
Okay, thank you very much. I think that's some very valuable insights, because us as technologists, we often think, okay, we can build something very cool here, but in the end, it's still an end user that has to use it, right? And then you really have to talk to those people like you to see how can we actually bring them together. I think here in the chat, it's put perfectly by Koen as well. That wealth management is a symbiosis between human and machine. I fully agree, amen to that. So thank you very much for these insights. I think we're actually right on time to jump into the final question before we might have some time left for Q&A. So please post your questions in the Q&A tab. So last one is for Evelyn. Also, please introduce yourself after the question. But what are the regulatory considerations when it comes to leveraging client data to fuel data-driven applications?
Thanks, Maxim. Hi, I'm Evelyn. I'm with Standard Chartered. I'm in the Wealth Management Compliance team at the group level. And actually, managing data risk has become a really big part of our day-to-day activities in terms of assessing for compliance risk. And if you were to take a step back and think about how, when we used to think of data, keeping data used to be expensive. So you'd be very careful what sort of data you keep and how long you keep it for. But today, the cost of keeping data has become so low, and it's so much easier to keep. And therefore, people are keeping more and for longer. And then they're thinking about, well, how can I use this data to convert it, right? And convert the data into useful information. And then the useful information that comes out of how you derive this data actually now becomes new data, new information, new data that you have to actually keep now. And underpinning all of this are, requirements actually coming from different regulatory requirements, right? And when we think about AI and we think about machine learning, there is no definition that cuts across universally across all regimes, regulatory regimes. So actually, what is AI? What is machine learning from a regulatory perspective? So if you take a step back and think of it in practical terms, when you're running a business, whether you're in the bank or you're running a fintech or RegTech company, I think there are a couple of things that you really need to put front and center in your mind as you sort of navigate this really new space, right? The first risk that I would say is front and center is privacy and secrecy. Many people think of that as just, in the past, information regarding your name or just very specific information relating to people. But today, this definition of what is private information or personal information is actually really broad, right? And they're just very, very large overarching regulations across different jurisdictions that you do need to be very sensitive to if you're using data, and data now includes information like, people's behavioral patterns. It could be also things along biometric information, because these days technology is using more advanced layers of data that we never used to keep before. So what are the considerations in this space? Really is you should be thinking about whether or not the loss of this data would result in harm to the individual. And that kind of harm could be anything from, this information was accidentally leaked and therefore his a peasant's wife finds out that her husband was, meeting with a different person, a different female, and causes a problem, that would still be potentially cause for some action, right? Or, harm to the bank because you're not telling your customers what you're actually using their information for, right? And how that information translates into decisions that the bank makes for them. So the fact that we're not being, if we're not being transparent to a client, that could potentially cause some issues there for you as well. The other thing is the data. The use of the data is what are you using it for, how you're actually using it, the quality of the data, how accurate, how complete, how reliable. And just as Koen was saying earlier, garbage in, garbage out. So if your data is dirty, you're going to get dirty outcomes, right? And you could be put to challenge there. So that's another thing to be very careful about. Third thing is records. How do you keep and maintain your records? Regulatory compliance risk there. Historically, people always think of how long should I keep something for? So they think of, do I keep it for 7 years? Do I keep it for longer? But actually, in regulations these days, there are also requirements for destruction. And that's not always something that people think about when they think of keeping records. So, and also you think of regulatory or legal requirements, but actually you have contractual obligations. You might have in your agreements with vendors, with, in your SLAs and all of that, where you would keep, data for only a limited period of time. And those are things that how do you actually track all of that? So it kind of brings up a lot of potential for missteps if you're not careful. And the last risk that I really want to point out is this whole concept of conduct risk by your firm or your organization. In the past, people thought of conduct as the conduct of individuals. And, has somebody done something inappropriate, like stealing data or something like that? But that's really not where regulators perceive conduct these days. It's also a conduct of an organization, the conduct of what are your values and as a business, right? And as somebody who's providing an AI solution or providing machine learning solution, are you in the conduct of this sort of offering, perhaps maybe discriminating against certain groups, or maybe you are not consistent in the application of your algo, for example, and all of these resulting in unintended consequences. And this could become an area of concern and challenge from regulators too. So essentially, this whole, there are all just different areas that is important for businesses and organizations to really ensure that you have a framework in place. Right. And at the moment, regulations are very much guidelines and not really prescriptive at the moment. So hopefully this just gives you a nice kind of overview and snapshot of what are the considerations you ought to have once you start playing a lot more with your data and how you keep them. So back to you, Maxim.
Thank you very much. I think that are some valuable insights. Some of them indeed straightforward, but others that I've never even thought about. So thank you for that. I think we have 4 minutes left for questions. I see that there's one question, and Koen already answered, but let's do it live as well. So Olus is asking, we see that wealth management conservatism among wealth tech is diminishing. A couple of years ago, most experts were confirming AI would never enter this area. How do you think it will exponentially even for high net worth wealth management? So what is your ideas around that? Anyone can pick in here. Maybe Koen, you can already give your answer live.
My answer is very short. Actually, it's what AI is missing at the moment is emotions, and what Jeannette was saying, that is the key to a good relationship between a customer and a wealth manager, is that human touch. And if the human touch cannot be mimicked or can be repeated or can be anticipated, then we would never be good wealth managers in AI, because at the end of the day, investing is an emotional process. If you want it or not, but that's the case it is. So there need to be some baseline that comes in. I think that's where we as humans will always have a very important place in assisting people in their wealth.
Yeah, and I may add, I think one area we see that, in terms of what you say about robo-advisors, is actually the quantum, right? if it may be easy to put $100 a month, even $500 a month, and let and try it out. But then if you're talking about 100,000, 500,000, that's where you would, I think, prefer the human touch, right?
Yeah, and also I always argued that if you got an algorithm, at the end of the day, it's always using data from yesterday, because that's how that works, and it anticipates to tomorrow because of data of yesterday. But traditionally, a lot of people, they like the fact that they can go to their private banker that already exists for 70 years or 100 years, and in those 100 years, they manage to gain trust of their customer. And the view they have might be a macroeconomical view or a mathematical view, but at least they got a view on the long term of the economy. And people like that. I think people liked or hunker to that kind of future vision, and they hunker to that impression of what's going to happen. I think that's a bit binary if you say it's going to all be computers. I kind of agree with Jeannette, right? It makes sense to put part of your investments there, and you see that in the US a lot. A basic part of your investment, it's strongly done in passive portfolios, ETFs, trackers. And then there is another part of your portfolio is in high yield, more private equity kind of stuff where it's very personal. And that's becoming a business on its own. Sometimes referred to as the shadow economy, but you see this happening. You see that large investors, people with a lot of money, they want to be personally involved.
Yeah, or at least indeed diversify as well. I would say, because we're running out of time, but I think it's some interesting hypothetical questions that, like, if we look beyond how well is a person actually in predicting this future, you can have a vision on the future, but that doesn't mean you can predict it. Same for algorithms. Of course, they can handle way more data and maybe find some patterns in there that we're unable to do so as humans. And then the question is, let's say in 10 years, you have some algorithms who always outperform the humans, then we have a different conversation, I think. But that's, again, looking in the future, and I think no one is able to do that. Otherwise, I don't think we would be talking here on the panel, but we would be sitting somewhere in the Caribbean or something. But that aside, I think this
which you were doing a few days ago.
Way longer. That was Sicily. I'm working my way up. But let's see. I see that we're running out of time, but I thought it was very, very insightful, this conversation. I thank you a lot. I think some of us will be hanging around on the platform. So if you have any questions, shoot. I think you can also add all of us on LinkedIn, connect there, schedule some calls if you want to. And then the only thing left is thanking the participants here. Thank you for the opportunity, Mona, and see you next time.
Great session, guys. Thank you very much. It's quite funny, and just quickly, we had earlier a session about ethics and risk management, enterprise risk management, and AI, and we were there also talking about what makes AI still not that interesting, and that was more or less like because it doesn't have a feeling yet. I mean, the question was, does AI has a feeling? And it's more a conceptual question. But exactly what now has been said is so true. I mean, that is why Jeannette still has a great job, right? Because she has feelings and she knows exactly what her clients want. Although we can be so happy about technology, it is still evolving. I guess that's really what I get out of this session. Great, thank you very much. And now hopefully you stay a little bit longer on the platform. And well, thank you very much for your time.
Thank you. Bye-bye.
Thank you.
Bye-bye.